Testing. Okay, what's up, everybody? Welcome to our Sunday higher time frame breakdown session. So, the whole idea behind the Sunday breakdown sessions is to zoom out and get an overall image of the market and obviously be prepared for the week ahead. As day traders, scalpers, we are trading intraday time frames, and we can sometimes get sucked into these intraday time frames and lose sight of what's going on the higher time frames. So that's the idea here behind the Sunday breakdowns, zooming out, getting that overall market image so that we can plan for our week ahead and try to develop an overall directional bias, something to stick to for the week. And if we don't see that happening, then we can develop other plans to possibly adapt to. So, starting out here on gold, we had a crazy week last week. We've actually tapped into this monthly area here around 1950 now. So, we had FOMC last week, and we did get that move up. We formed new highs with FOMC, but we had a more neutral Fed, not really bringing in any new information. So that sentiment is pretty much priced in with regards to the Fed's monetary policy. You know, they have started to slow down the increasing of rates. We saw 50 basis point increase in December. This month we saw a 25 basis point increase. So far they are slowing down their rates, and that's what's really driven this move up here on gold, as well as improved inflation and recession scares. So the fact that the Fed didn't really bring any new information to the table, and we had most of that current information priced in, we could see that lack of volume to continue moving up. If they had come in extremely dovish, you know, saying, oh, we're going to cut rates, fight on inflation's going extremely well, we could have seen a little bit more volume to the upside. So obviously just that lack of buying pressure to continue us moving higher, we saw this move we saw this pullback begin to start. And then on Friday we had insanely good CPI, really good, sorry, not CPI, NFP. We had really good NFP numbers, labor market data here, unemployment rate and NFP, very good numbers for the dollar. So we can see that's brought a bit of strength here to the dollar, and we saw a sell-off on gold last week. So like I say, part of the reason we've been having this rally on gold is based on recession scares. So now to see that the labor market data was so strong and the Fed's not really bringing in any new information, we had this extremely strong move to the downside. So we could possibly see a shift in sentiment coming in here, and for the time being, just taking note of what's going on the weekly time frame, we had an extremely strong bearish candle closure off of those key areas at 1950. Also looking at our first weekly candle for the year, we opened up with no bottom wick, and that kind of bothered me. I said that I do believe we will come down to create that bottom wick at some point. I'm not too sure if it will be this week, but just looking at the weight that this NFP has had, and like I say, the lack of any new information to drive gold higher, I do believe that we'll start to move down to 1823, 1824, and possibly get that bottom wick for, if we had a yearly chart here, for the year basically. We can see that we've also started to break some of this bullish structure. We had previous lows at 1900. Alright, so we've broken this bullish structure. What would be ideal is to see pullbacks into that area to then look for more sells here. But we need to keep in mind that is about a 350 pip move. Just looking at DXY before we continue further with gold. Alright, DXY is actually still maintaining this bearish structure. If we zoom out a little bit here. So if we had to put in a trend line, something like that. You can see here, like I said, we are still maintaining this bearish structure. Last week we just created new lows with the FOMC, and we are now seeing a pullback, which is very normal. Looks like we are moving up to retest these previous lows, which would make a lot of sense to form resistance there and continue moving down. Could even get deeper pullbacks, and I wouldn't say that we are necessarily bullish on the dollar until we get a break above these previous highs right here. Then you could consider us breaking this bearish structure, shifting into a more bullish sentiment. For now, we are looking at deeper pullback phases on the dollar, which means further moves to the downside on gold. And we'll just have to monitor if we are breaking this 105 level to see the dollar bulls coming back into the picture. But for now, what we could see is something like this and continue moving in this bearish trend. What is very interesting is, based off the weekly, we had this extremely strong bullish candle closure off of this key support area, key demand area. So, I think the sentiment of the Fed being a little bit more dovish or neutral has been very much priced in, and that brought weakness to the dollar. But we do understand that inflation is still a problem, and that down the line the Fed still may raise rates, and that this fight on inflation is a long process. So we could possibly see these bigger institutions and whales getting involved from these price points to jump back into that sentiment we were playing last year with the dollar being so bullish. But like I say, to really confirm that for us as retail traders, you'd need to see us starting to break the structure, or you would need to see some more hawkish, a more hawkish tone from the Fed. So we do have Jerome Powell speaking on Tuesday this week. So we'll see what he has to say. But for the time being, we are just in this pullback phase on the dollar. Like I say, pulling back to these previous lows, and we could still see that move down. Now for gold, what that could relate to, if we are still moving up on dollar throughout this coming week, you could see further pullbacks on gold as well. So possibly that move down to create that bottom wick for the monthly. Like I say, we just need to be understanding the sentiment right now. So right now we can see NFP is holding, or the improved labor market data is holding a lot of weight, and that for the majority of the Fed information has been priced in terms of rate hikes and the FOMC data. So just looking at the chart here, I could see us driving further down throughout this week. Pullbacks do make a lot of sense up to 1900. Obviously that's a very big range to play, and on the intraday time frames we could even possibly look for buys back up to there if we do start to form some bullish structure. But just judging from this move, I would want to see a bit more data. I would want to see more price action leading me to believe that buys will be a little bit safer. For now, I think pullbacks and looking for that resistance to form for those sells makes a lot more sense. Just looking at price right here, you don't want to be catching a falling knife. Right now we are still extremely bearish. Based off the weekly candle, we are bearish, looking to continue moving down this week. So it would make a lot of sense to retest previous lows at 1900, But maybe we come out early in the week and we just continue that same sentiment from last week and we continue driving down here to 1924 would be my targets for some of these sells. That's also extremely big move down. So we just need to be aware of some other key areas to the left here, like 1850. Sells into 1850 from 1870 are very reasonable. $18.32 obviously being the support right here, also an area to just look out for. So just getting into some trade ideas here on gold. I've got the support right here. I could see further sells below the support at 1863. Pullbacks into 1870 would be very nice for some sells as well. So pullback to that level resistance formed would be very nice for sells. We can see this area of consolidation to the left. We've broken below this area where we found support at 1870. So that's the level I'm looking to pull back into, get a retest, and continue moving down. Other areas to note here, 1882 or 1880, let's say. Like I said, we could get pullbacks all the way into 1900. Now, on the intraday time frames, that could definitely give us some opportunity for buys back up to that level. But we'll adapt to that as the week goes on. And sells below 1863. So some key areas I'm looking for price to move into this week to possibly be looking at some nice sells down to 1823 would be pullbacks into 1900, 1888, 1870, and sells below 1863 here on gold. In terms of bars, for now, bars are going to be extremely tricky. I do think once we breaking back above 1918, if we see that this week, understanding that that is about 400 pips away, 500 pips away, you know, what are the chances we get those bars? I think quite slim. But for the pullbacks and the sells, I think we have a very high probability for one of these setups to play out. So I'd rather just stick to the sells, rather see us get those pullbacks, understanding that earlier in the week we are likely to just set up order flow for the week and get those pullbacks. So Monday, Tuesday, if we see price moving up and we just slowly moving up, you know, maybe Monday we get that pullback and then Tuesday Fed Powell says something along the lines of being a little bit more hawkish, and then we get that bearish continuation. Just keep in mind some of the target levels here as well, 1850 and 1832, looking to the left. Then GJ. So GJ last week was expecting the Bank of England to be a little bit more hawkish and give us that volume to the upside. I've been speaking about this traffic to the left here. This clean move down we had in December. I was speaking about mirroring this move, but understanding that this is a massive move and you would need a catalyst for us to actually get a nice clean move up to mirror this candle to the left. So I was anticipating a more hawkish Fed to come in here and give us that break above 161, 162 for those bars. But they came in a bit more neutral, dovish, not really bringing anything new. So we just failed to break this resistance, didn't have enough volume moving up, brought a bit of weakness to the pound, and we've come back and retested this demand area to the left. So you can see I've drawn up quite a big area here. Just looking to the left, we have this weekly resistance area from 2021 into early 2022 that we held above for some time. And then we have this support area at about 155, 500, 156. So I'm just taking this whole area as an area where we've seen a lot of reaction to before. So even though we closed bearish last week, we've tapped into this area once again, and we haven't closed below support here as such. I know that the structure looks pretty bearish, and we've got a strong bearish candle closure on the weekly. But if you zoom out one more time frame here, on the monthly we can see that last month we closed bullish off of this key area here at 156, and that this move down early in this month is most likely just setting up order flow for the rest of the month, because the reality is the Bank of England did raise their rates by 50 basis points, and Bank of Japan is keeping their monetary policy dovish, keeping their rates in the negative. So neither of these big central banks have changed their monetary policy stance, and what we've seen as a result of the difference in their interest rates is GJ being more bullish. So we're still extremely early in the year. We've had that pullback into this key demand area, collecting a lot of orders, and based off the monthly, we already got that bullish monthly candle closure in this area. Your new monthly candle, like I say, we've got a bottom wick very early into the month, setting up that order flow for the rest of the month. Got a bullish daily candle closure on Friday, and if we zoom into the lower time frames here, we can see that we have actually started to break out of some of this bearish structure. So we are still in a range here, as you can see, ranging between about 162 and 156. But based off the daily and just this most recent structure, it looks like we are shifting a bit more bullish, getting nice reactions off of 156. So you can see this trend line here, we have had a nice break and retest. Support formed around 158, which is an extremely key area we've been looking at for some time. Psychological level as well. So from here, support formed, we do look good to continue up. Safer bars at this point would most probably be above resistance here at 158, 700, let's say. Before I continue further with GJ, let's just have a look at the yen index as well, since we referred to the dollar index for gold to build up some confluence there. Here on the yen index, we can see that I had already had that area highlighted, but we were extremely bearish here throughout 2022. And if we zoom out a little bit more, we can see just overall we are bearish here. We are coming up to retest these previous significant lows here at around 80 on this chart. And you can see in this pullback structure, if we zoom in, we obviously had higher highs and higher lows being formed. Now last week, we failed to create new highs, and we've actually broken below some of this bullish structure. We've broken these previous lows right here at about 76. So starting to see the structure possibly shift a bit more bearish on the yen index. Friday we had a lot of weakness in the yen, and that would generally result in GJ strength. So we can see that we've moved into this key demand area on GJ. So we're just starting to build this confluence now. Like I said, I like these bars above 158,700, and then moving up, you've got a level at 159,650. Bars above there not looking too bad either. Bars above 160, very key area 160. May even be safer to just be taking those bars above there instead. Understand as we move back up into this range, the price action to the left is going to be quite choppy. So we could see that move up like this, and as we're breaking into this range, we just do have some troublesome areas here, and you may see some funky price action within that range. So since this is a higher time frame breakdown, I will just give some basic trade ideas looking at most recent price action. So bars above here, and then in terms of sells, I do want to just be very careful with sells. Extremely careful with sells. If we look at GJ in the past, it's very normal for us to range for a period of time before getting that higher time frame continuation. But as we move to the lows of one of these ranges, so right here, okay, so we have a similar scenario right here where we are ranging for some time. As we move into these lows, you can see we generally do hold this area quite nicely and get a nice rally up. So just keeping that in mind, that we've had a test of the lows of this range, and we are already seeing reactions from here. I would like to just stick to the buys, as like I say, from what we've seen in the past in these higher time frame ranges, once we find support at the lows of the range, we generally do get these rallies back to the upside. And then very, very nice bars above 162. Above 162, we've got this clean traffic to the left. So with that move down last week, we've basically had that slightly more neutral dovish Bank of England being already priced in, and now we'll see that higher time frame sentiment come back into play, and we'll be looking to take advantage of the bars off of the range lows here, or a breakout of the highs of this range here to start filling some of this traffic to the left. So that's what I'm having a look at here for GJ and Gold. For Gold, like I say, buys at this point with this downside momentum, I do want to be careful. I would like to see some more candles print, see some new structure to work with to be looking for buys. Otherwise, just looking for buys above 1917, and then just rather looking for those pullbacks and sells or sells below support. DXY still in this bearish structure. We are still in this pullback phase. GJ overall ranging, but we've had a tap back into these range lows. Our monthly candles bullish here, looking to possibly actually come and flip bullish on the monthly in the next week or two. Would be very interesting. Even though we closed bearish, I would not be rushing to take sells on GJ. So that's going to be that. And I hope that you guys are able to take something from this and able to execute on some of these ideas. I will be streaming tomorrow morning, and then Tuesday, I'm having an op, so I will actually be off on Tuesday, and I'll see how recovery goes. I'd like to be back ASAP, so I'll maybe see you Thursday. I'm not too sure about Wednesday. Otherwise, latest, I'll see you next week. And for the community and the members, I will be active in the Discord, so I will see you guys tomorrow. Take it easy.